In the currency quadrant, taking a look at the March Japanese yen, which dropped for the third session in the last four, down to the lowest level since November 23rd. That low today, 66.52, was down 0.25% from yesterday's close at 66.70. The high, 66.76.5, was only up about 0.1%. So I wouldn't call it a straight down day, but it was pretty weak through most of the day. Now, on a weekly basis, the yen is working on its ninth consecutive week lower, and through today is down 7.3% from the high close on December 29th of last year, finishing today, down about 0.2%. Now, inflation data is due out later today in Japan. January inflation day, it has an expectation of a lower year-over-year inflation reading of plus 1.8%. Last month's read on year-over-year inflation was plus 2.3%, and ex-energy was plus 3.7% year-over-year. So that's a little high for the Bank of Japan, although they have not leaned toward tightening at all, and they probably won't indicate any sort of tightening if they get that 1.8% year-over-year headline reading as expected. Month-over-month headline was up 0.1% through December last year. That, again, is a month-over-month number, and that's pretty consistent with about 2% inflation year-over-year, so we'll have to see how that plays out. U.S. yields rose again today, pushing the dollar a little bit higher against the yen, the New Zealand dollar, and the Aussie dollar, but the dollar was lower against the euro, the pound, and the Swiss. When you look at yields in the U.S., we were up 7 basis points on the 2-year yield, 5 basis points on the 5-year yield, and 4 basis points on the 10-year yield, 5 basis points on the 30-year as well. But it really was a mixed reaction in the currency markets. But the yen did what you would expect with higher yields in the U.S., and that's fall against the U.S. dollar.